Welcome back, traders and investors. We have Chaim Bodek on the line, and he is the founder of Trading Machines and Decimal Capital Markets. Also, Ezra Rapoport, head of automated trading for Flammarion Capital. Guys, how you doing this morning on Benzinga's pre-market prep, brought to you by Charles Schwab?
Beautiful day here in New York. Thanks for having me on.
Okay, let's get right into things. And we've been talking about the complexity of the markets. Are the markets too complex? This is for you, Ezra.
You know, I was listening, and, I think that the fragmentation that we have in the markets, and, what you were saying about matching natural buyers, natural sellers, I think that even markets at their most rudimentary are fragmented. The pit trading evolved out of, medieval market-style trading where you'd have market days and there'd be multiple vendors and they'd be, there'd be open outcry to, crowds of buyers, and it'd be, intermediation was natural, and it is natural in capitalism. It's what brings, actually what forces, sellers, what forces suppliers to provide the lowest price. I don't think markets are utility. I think it's, a capitalist, opportunity.
What about
Sorry, go ahead.
What about the order types that Chaim has concerns with? I mean, can we simplify things?
There's a natural conflict, obviously, at a certain level, because the exchanges, naturally, their business model has to be to drive volume. And at some point, the sales end of the exchange and the business end of the exchange are going to come into some amount of conflict, as will happen in any business. And, and so they're going to try and, the sales end is motivated to provide, features to preferred clients, which, may end up conflicting with the business end of the exchange, and, and then, providing the best execution quality to all participants. And this conflict is natural, and it's a good thing. And what Chaim's doing is also a very good thing, because there have to be natural checks in any capitalist system. So Chaim serves a very important function.
Okay, back to you, Chaim. Your thoughts on off-exchange trading. Is the rise of off-exchange trading a concern to you?
Well, I'm an options guy, and in the options market, exchanges, the orders need to be sent to an exchange for competition, even if they're negotiated off exchange, and that allows the electronic crowd to provide price improvements. So one of the things that's always irked me about the stock market is that a market maker can buy an order and trade against it off exchange without any competition and do 100% of the order. So I've been naturally kind of resistant and critical to the off exchange trading, from the beginning, because I've seen an alternative system in the options market work pretty well.
And to you, Ezra, with so many trades happening off exchange, are we discouraging displayed liquidity?
In theory, I have no problem with, complete transparency and, all liquidity being displayed. I think that to a certain extent there are reasons to have off-exchange transactions. I think generally transparency is just a good thing, and I think price discovery, should never face, delay or should never be hidden from the public. And I think that, I think there's a tendency toward lighting, transactions, all transactions, and I think I have to support that.
Okay, this is a question for both of you. I'll throw it to Chaim first. Do humans still have a place in these markets? Are we slowly automating them out of the markets?
When you go look at how most of the automated trading desks operate, in terms of let's say the large market makers, They have a significant human presence. I mean, I know Ezra's involved in black box trading, and there's a few firms out there that are entirely automated, but the majority of the electronic trading firms out there are what we call gray box, where there is a sophisticated pilot. Let's say, like an air, like a fighter pilot, right? You have a great trader connected to a great system, and that's because the machines aren't as smart as people give them credit for. I mean, that's one of the reasons why they need to be assisted with special order types and things like that.
I agree. I agree, and I think automation is basically going to change the role of the human brain in trading. I think that it's going to abstract the human brain and allow us to do to worry about higher level functions, higher level strategy, and the individual order placement, order interaction, the lower level market interaction, will be performed by automation. And I think that basically, it's just allowing us to use the human brain for what it's really meant to do, and that's, generate alpha.
Okay, relating back to the night debacle a few years ago where the algos ran wild, I don't know why someone just didn't pull the plug out of the wall, but how can we control having another event like that? I'll throw it to you first, Chaim.
Well, that's funny. It's in the options space. We have to send out hundreds of thousands of bids and offers to meet the 9:30 open. And that function is one of the most difficult tasks that I've had to deal with in my career. So very early on, and we're talking about the late 90s, where electronic trading risk controls so that you wouldn't accidentally step on the market and trade a few billion share equivalent shares of stock. There's a very, very strong and long tradition of electronic trading risk controls, and what happened at night is quite simply that they had they were a firm that was primarily trading upstairs, that was not required to have the same type of technology platforms that, let's say, the actual high-frequency traders or the option market makers had, and I just see it as purely a negligence issue. The technology is already there. It's like that's why you hire good people. They create the electronic trading risk controls to prevent events like that.
Ezra, any comments on that?
Couldn't agree more. Basically, it's automation is not a brand new field by any means, but its penetration into finance, I think largely I see us, we're kind of at the Charlie Chaplin black and white movie stage of automation where we've got all these tools and they're out of control, and the classical fears that accompany automation, that Charlie Chaplin would have been freaking out about in his in his movies. I think that's kind of how things are still, it's still early in automation and finance, and certain safeguards that should just be de rigueur. If you don't have the right teams doing performing your automation, if you don't have people coming from the proper backgrounds, then you will have events where safeguards aren't in place. And I agree with Chaim, that is a people problem, not a technology problem.
And related to that, Latour Trading fined $16 million for net capital violations. Are some of these high-frequency trading firms undercapitalized? That's something that could really bring down this market in a hurry.
It sure seems so with the Latour case. So I mean, that was pretty extreme. Usually the net capital calculations are, usually you work very closely with people. In my experience, I would use outside consultants to double check things, and it's just surprising in that case that they were able to run that long without this being alerted by internal staff. Just surprising.
Ezra, any comments on that?
I don't know the specifics of the case, but I'd have to say that it sounds like a clearing firm issue, frankly. It sounds like that due diligence has to occur on the clearing side, and, clearing is the point of, last, whatever. They get the last look at orders coming in and going out. They know the risk. And if they have an undercapitalized client who's over leveraged, I think that's a clearing issue. Technology will bring some of these issues to the fore, but it's clearly not the cause.
Okay, from both of you, thoughts on the IEX? They are promoted as the anti-HFT exchange. Is this true? Can investors really benefit by going through their platform?
Let me answer that. So I'm a little bit sympathetic and biased. Before I ever heard of IEX, I was actually doing a little bit of a tour among the major investment banks, pitching them a very similar concept. And the features that IEX is centered around are features that the other exchanges are currently being investigated for. Like for example, there's this issue of latency arbitrage where an exchange or a dark pool may allow trades to occur that would be impermissible if you were using the fastest price feed data. So one thing IX has got going for them is they are trying to take midpoint orders and pegged orders and make sure that they trade at prices that are that are fair. And the other exchanges, a certain dark pool is being investigated for exactly the opposite behavior of actually tripping up the investor orders and allowing the HFTs to come in and conduct trades that would normally be rejected as impermissible.
Ezra, any comments on the IEX?
Look, first of all, they've got great PR. But the way I see IEX is, it's like, basically, the whole queue priority thing and the randomized, delay. For me, it's like if you're going out to bars, right? And, I guess if some people get real frustrated when they wait at the bar and you can't get the bartender's attention and, you're jumping up and down. And, I guess some people might get really annoyed by that. And I see them as being like, all right, the bartender's just going to randomly pick people out of the crowd and just give them their drinks. And if you're the kind of person that really hates waiting for your drink and jumping up and down, then that system might be more fair. But for me, I don't know, I'm tall, I've got long arms, it's a different gimmick. Every bar's got a gimmick. And if their gimmick is going to be that the bartender doesn't care what you look like, everyone's going to get served randomly in random order, so that appeals to you, I say go for it. But, really, don't be fooled by anything other than the fact that, they've got it's another exchange and they've got a cool twist on cues.
And
it's just a game at two at some point.
Or you stand next to the person that you think is going to get served next, and you have them buy your drink. But okay, thank you, Ezra Rapoport, trader at Flammarion Capital, giving us his take on high frequency trading. We're going to let you go, Ezra. Haim's going to stay on the line with me, and we're going to bring on Dave Lauer and Chris Nagy of the Core Group. We're going to talk a little bit about the Alibaba.
You guys have a great day. Thank you.
Okay.
Thanks, Ezra.